let me go ahead and start by introducing Bruce Nash, who is CEO of Nash Information Services, which publishes thenumbers.com. Today's event is talking about comps, which in the industry mean the report that you usually put with your film business plan when you're submitting it to investors or to business partners that you want to work with, which reviews how films like yours have performed in the past. Getting good comps is critical to ensuring that you can be believed when you say that your film is likely to perform to a given level if it is funded and if it is produced and if it is distributed. You can also use the data that Bruce provides to get a sense of who should be distributing your film or who's a likely distributor for your film, because you can take a look at who has distributed other films similar to yours. So it can help you answer questions in the earliest stages of building your film package and in the earliest stages of setting up your business relationships with distributors as well as investors. So having said all of that, I'd like to let Bruce introduce himself.
Great. Okay, well, thanks very much for the introduction, Nancy. Thank you to everybody for joining tonight. So as Nancy said, I'm going to be talking about comp analysis and the work that we do at Nash Information Services. I'll start off by giving just some background on the company. As we already talked about, we run a website called The Numbers, which is nearing its 20th anniversary. We've actually started it in 1997, so we're just a year away from lasting 20 years on the internet. And that's kind of our sort of public-facing site. That's where we publish, daily and weekly box office charts and video sales information. We also license that data through our Opus data service, and then we provide consulting and analytical services, which is what I'll mostly be talking about tonight. So very quick history of the company and a sort of outline of what we do. As I say, we founded in 1997. I started the Numbers website, and it really, it's been a business that's really been driven by filmmakers. So after a couple of years of running the site, more and more people were getting online, and we started getting emails from people saying, I need numbers for my potential investors. And so starting in about 2000, started providing analytical work for filmmakers and expanding the coverage of what we track to support that. So originally we were just doing domestic box office. We expanded that into international box office and initially DVD sales tracking. We now track on the domestic side all video sales, so DVD and Blu-ray, and video rentals. Back when I started, it was easy because that was Blockbuster. Now, of course, there's all these different VOD platforms. We actually have estimates of VOD numbers for pretty much every film that comes out now. We also track international video sales, so we've got an idea of how films are performing on video internationally. And then on the other side, we have models that we use based on all the data that have been provided to us by filmmakers. So we have around about 1,000 clients, mostly independent filmmakers, and a lot of them have been kind enough to share data from their films with us, which has allowed us to build models for how much we would expect to get from international video rentals based on how the film has done in other markets, what TV revenue will be, what ancillary revenue will be, and also what the marketing costs are likely to be for a film. The studios use us for data. We have some of the biggest production companies in the business, and then the vast majority of our clients are independent producers, and we work from folks who have been in the industry for 30 or 40 years to first-time filmmakers who are trying to put together a package for their first film. Most films that we analyze are pretty low budget, so we're talking under $20 million in most cases. We've analyzed films at all budget ranges, as well as the Numbers website, which we'll look at. We also have our Opus data service, so we actually license the data, and we have various clients who are using our kind of raw data feeds in order to do analytical work. And the way that sort of has split, interestingly, has been on the investment side, people tend to license the raw data, and on the production side, we tend to do the comp analysis reports. On the production side, you're typically looking at individual projects, and on the investment side, you're looking at more sort of general information on what the market looks like.
So you have investors who are actually looking at your data as well.
Correct. Yes, and looking to model what kind of film projects they should be investing in. You know, if you've got $10 million that you're looking to invest in films, you're going to say, well, what genres tend to be better performing or more reliable, or have less risk. Oh, and one last thing which happened about a year ago was that we became the official adjudicators of records for the Guinness Book of Records. So if you think you've broken a film-related record, please email me, and I will be happy to adjudicate whether it's a real record or not, and perhaps get you in the book. So why do people do financial analysis for their films? And as Nancy, you already alluded, because investors want to see projections. And sitting on my side of the desk, it's normally because they want to see them tomorrow. But I think it's important to kind of talk about why we should be doing financial analysis. And it's really at heart, when you're making a film, as a producer, you're really involved in hundreds of negotiations. You're negotiating how much you're going to pay the actors, the director, how much you're going to pay for the script, what locations you're going to use. There's just all of these negotiations that happen. And in order to make any sort of a deal, you have to have some idea of what a fair deal is. Now, obviously, if you've been in the industry for 30 years, then you call up the guy that you've worked with all this time, and you say, we've got another project, are you interested in helping out? But even for experienced producers, there's always something new. Do you sell this film to Netflix? Is this offer from Amazon Prime a good one? And really, we've got involved in all sorts of fascinating questions like that. Somebody will call up and they'll say, well, somebody's offered me $1 million for all international rights for my film. Should I take that deal? This actor wants $500,000 to star in the film. Are they really worth $500,000? And even a few times we've had questions that have been pretty crazy and oddball, which is, we struck this deal with the director, that he'll get a bonus if the film makes over $10 million at the domestic box office. How likely is it to happen? If we go with this distributor, how likely are we to hit 10 million at the box office? So it can be, all sorts of things. But all of these come back to having a real picture of what the industry looks like. And that, to me, is really the purpose of doing this kind of financial analysis. It's not just having something for a presentation for an investor, and then you kind of put it to one side and you go ahead and make your film. You really need this kind of analysis, at every step, I think, through the production process, through the distribution process, and even into reviewing the results that you get at the end of the day. So what are your options as a producer? There are really three. The first one is be rich enough to make the film yourself. And that actually, sounds kind of, crazy, but actually is kind of more common than you might imagine. Steven Spielberg through DreamWorks, George Lucas through Lucasfilm back in the day. Companies like Participant Media, Interscope Communications. These are vehicles for people with lots of money who want to make films, and a lot of films actually get made that way by companies that have the cash to do it, or even though they may, for a particular project, get a partnership and co-produce with a studio, they're still, they have the wherewithal to make a project happen if they want to. This is also viable for what I call guerrilla indies. So films like El Mariachi, Paranormal Activity, Escape from Tomorrow, super low budget films where somebody is taking, equipment. They're shooting, sort of live on location, not really, in the sort of meticulously planned way necessarily that you would look at for a film. That's also, very valid for a documentary where, if it's based on interview and it's based on footage that you can get at low cost, or you can make a fair use claim against using footage, you can actually make a documentary on a very low budget.
Mm-hmm.
Something that we I think thought a few years ago might come to the rescue of other filmmakers was crowdfunding. It is a valid way of raising money for a film, but it has fairly narrow applicability in my opinion.
I just heard a distributor say the problem is that if they buy your film, and if it's been crowdfunded, they're not going to buy it once you start shipping out DVDs, and they're not going to honor that commitment. If you make that obligation and you actually fulfill it, you're creating problems for yourself on the distribution side, if I'm not mistaken. Right.
Yes, you can potentially do that, particularly if you do something particularly creative in that regard.
Mm-hmm.
Yeah, that's true. That's true. Okay, so number one, have the money you need to make the film yourself. Number two, be a studio. Of course, the studios finance their own films just fine. If your goal as an investor is to put money into the next Star Wars movie, Disney will politely decline your offer almost. They know they can make money out of Star Wars. And then the third option is really to use the film financing model, which I'll go through briefly here. I think a lot of people on the call probably are somewhat or very familiar with this. But basically, for independent film, there are really three parts to film financing. First is to try to minimize upfront costs, of course. As an independent filmmaker, you're always looking at ways that you can maximize the bang you get for your buck. In particular, these days, with the right project, you can get a back-end deal with talent where they defer payments, they get a slice of the profit. The second piece is to pre-sell the film internationally. So you package the film, you have the script, you have a presentation, you have committed talent, and you go to Cannes and you sell the project to distributors around the world, with the goal of getting a commitment from them to give you money when you deliver the film. Mm-hmm. And it's possible to turn those commitments into cold hard cash that you can use to make the film. So you go to Germany, somebody says, well, I'll give you $1 million for the German rights to this film, and you deliver it. Mm-hmm. And you get a completion bond for the film, which guarantees that you'll complete the film. And then you can go to the bank and you can take the agreement with the German distributor, you can take the completion bond, and you can turn that into a loan from the bank to actually make the film. Not for the full $1 million perhaps, but for a sizable chunk of that. Mm-hmm. And then the third piece, which has become extremely popular around the world, is that you can recover the cost of production through tax incentives. There's lots of those available in the United States. There are various national film boards that offer support for films or tax incentives for people to invest in films. Mm-hmm. So from those three things, the goal is to cover as much of the cost of making the film, before you start production. In theory, it's possible to recoup 100% of the production budget before you even start shooting. And a few of my clients over the years have managed to do that with particular films. In general, it's much lower than that, and really it varies all over the place. Typically we see anywhere between about 0 and 60% of the film being financed through these other sources, as well as the equity that needs to come in from investors. But the good news is, if you can do this, if you can get 40% of the film financed through tax incentives, through pre-sales, and through deferred payments to the talent, then you're looking for a smaller piece of equity, and it becomes a less risky proposition for the investor, because essentially, maybe they're investing, maybe you're looking for an investment of $600,000 in $1 million film, but the investor is getting $1 million film for that $600,000.
Right, and the other thing that's important about the other reason that film financial modeling is important is that magic only works if the film is likely to make $1 million film that's going to make $3 million or $4 million or $5 million in distribution. So if you say, if you've got some crazy notion that you're going to produce a $10 million film, but there's no way that it can make that money back, even if you do manage to put together $6 million or 60% of that money through all these other sources, you're still going to lose money. So is your investor, which makes it really hard to make that second film.
Yeah, no, I think the thing about this, and it's the most common complaint about the film industry, actually, if you talk to your friends over dinner, they will say, well, why does Hollywood make the same film over and over again? And part of it is because of this financing model, because when you go to the German distributor and you say, I'm making this film, they're going to buy it based on their knowledge of films that they've distributed in the past. And so, it became very easy to finance a film, which was a comedy starring Adam Sandler, because every international distributor knew who Adam Sandler was, knew how his films were going to do in their territory, and they could say, well, every film that we got from him over the last 10 years, we got $5 million in revenue for, so we're going to offer you $2.5 million upfront for the rights to this film. It's kind of a no-brainer for them, and that's how you get kind of locked into this cycle. But as a producer, you kind of have to be aware of that if you go to a film festival and you have this completely novel film that nobody has ever seen the likes of before, people probably aren't going to be very interested in buying it, because it's much more risky from their perspective than taking a known quantity. And so, if you look at the people who have been very successful with this kind of model, unfortunately, they tend to produce films that have a certain feel to them, be it action movies or horror or particular types of drama. The other thing to think about there is that some genres of film travel better than others. Horror and action films tend to travel quite well. Comedy tends to be can be very specific to a particular territory, and things that people find funny in the United States, they may not find funny in Germany or in the United Kingdom. So that's something to really think about as you're putting together a plan for a film. Is this the kind of film that is going to sell well in Germany or France? Funny, puns don't translate very well. Even if you dub a film, a pun isn't going to translate into French. So you really have to think about that as you're putting together the plan for the film, and be realistic. And again, this is something where hopefully our analysis can help.
You can actually tell people by country if they were to ask. You can tell people not just how much it makes in globally, internationally, but how much it makes per territory. Correct? Right.
Exactly. Yeah. And to illustrate this is a chart that we prepared. I've left some of the numbers off it, but this is a profile of all studio-produced films from 2010 to 2012. So this is 3 years worth of films that were financed by the studios. So of these films, what we found in analysis was that about 46% of them lost money. So basically, if you're a studio, there's basically a 50-50 chance that your film, when you greenlight it, is actually going to turn out profitable. But 100% of the profit comes from the top 22% of films. So basically, you've got 46% that lose money. The next 32 or something percent recover the loss from those first 46%, and then the 22% at the end, is where all of the profit comes to from the studios. This is why studios keep on making, sequels and all of that kind of stuff. about 60, at least 60% of independent films lose money. It's probably higher than that. You know, our data is probably skewed a little bit towards the more successful independent films. So, you know, this number is probably low. It's probably more like 70, 75% of independent films lose money. And then 100% of the profit comes from the top 8% of films. So if you think about this from the perspective of an independent filmmaker, and you know, let's say you're going to make 10 films across the course of your career, probably the first 9 of those are going to be overall kind of break even, and then there's going to be that one film that's going to be the big hit, and that's going to be kind of your, you know, your retirement plan, is the continued income from that single film. One of the issues that brings up as you're doing an analysis is, well, if 60%, let's say, of independent films lose money, then how can you make a fair projection? And you know, this is where we separate out two kind of things when we're doing a comp analysis. So we go into the analysis by making, and we encourage our clients to actually state this to anybody who's interested in investing in the film, some assumptions about the film. So we assume that the film is going to be delivered on budget, that it's going to be successfully produced, that it's going to be acquired by one of the target distributors. So if you say, you know, we're trying to get this film to Fox Searchlight, that actually it ends up being distributed by Fox Searchlight, or Focus Features perhaps, you know, but a comparable distributor. Third, that distributor is going to choose the appropriate marketing strategy for the film. So, you know, you find, you know, a lot of the times, unfortunately, you know, a distributor picks up a film, but then it doesn't quite fit into their schedule. They thought that it was going to be their Oscar movie for that year, but then, you know, they decide that actually they're going to pick something else. So there's lots of sort of shuffling around that can happen. We assume, though, that the distributor will properly market the film. And thirdly, and fourthly, excuse me, that finally, that people are actually by and large going to like it. So, you know, we're not going to do, you know, a script analysis. We're not going to evaluate whether the director, you know, is competent to make this film. We're looking just at the fact that, you know, that films of this type that have been well made, that people have, you know, responded to positively, have done this kind of performance. And really, as the producer, the director, you know, we sort of regard it as your job to, you know, show that you have the ability to make this film, that, you know, you are going to hire good actors, that the script really holds up. And if you make these 4 assumptions, then you find generally you're kind of getting rid of a lot of those films on the left-hand side of the chart. Those are the ones that, you know, the ones that fail are the ones that didn't get picked up by the distributor that you were hoping for. You know, you spent $15 million and then it went direct to DVD through, you know, a small distributor, when, you know, it really was the kind of film that was hoping to get, you know, into the hands of Weinstein or Focus Features or Fox Searchlight, and so on. So, you know, all of these 4 things, you know, we assume to be the case, and when that is the case, you find that independent films tend to be profitable. So, you know, the presentation is, you know, part convincing somebody that you really are going to be able to make the film and that you have the talent and the script to do it. And the other part is based on the assumption that those things are true. This is how you would expect the film to perform. So finding the comps. So one of the things that you know, I did when I started running these reports for people was obviously research what people were using. And what you would see a lot were presentations where somebody would show 3 films. They would show, you know, here's an overperforming film, here's a medium performing film, and here's a film that kind of did not quite so well. And there's, I have a mathematical background, and so as a mathematician, you know, I kind of looked on this with a little bit of horror, because it's not really the way that you do analytical work. And really, you know, when you're doing serious analytics, you would say, you know, you want to have at least 20 data points in order to get some kind of picture of what this industry looks like. So, you know, there's a bit of a trade-off here. You know, sometimes, you know, we'll use fewer comps for, you know, particular types of films where it doesn't make sense to use more. but we really generally recommend finding 20 comps. And, one of the things, with independent film in particular is you don't really know going in which films are the successful ones. It's very tempting to sort of look at something and go, well, it made $10 million at the box office, therefore it must have been successful, when, perhaps it cost $20 million to market, and they never made the money back from all of the marketing of the film. So we recommend taking about 20 comps. And then you can always pick some out and say, well, Winter's Bone is a good example of one that, did well. A Mighty Heart is a good example of a film that did less well, and this is why we think these things happen.
You just mentioned marketing, and one of the strangest things is how many times I've heard people say, well, you can't factor marketing into the success or failure of a film, but I think it's completely untrue. Like, the marketing strategy for a film is critical. Part of that is by being able to market the film so there's demand, so the distributor's got a good reason to actually come through. And the other reason is that how to write your contract with the distributor such that if they fail to perform, that you can say, well, I'd like my film back. so I can go do, so I can actually make some money on it, because it
Yeah, no, that all great points. Yeah, I mean, what we generally find is we sort of end up coming to that through the opposite direction a little bit, where once we've provided the analysis, we can look at, say, the distributors who have been successful in a particular area and say, well, these are the guys you really need to be talking to for this type of film. Obviously, if you're looking for Oscars, then Fox Searchlight and Focus Features and Weinstein are pretty good bets. If you're looking to distribute, direct-to-video, Lionsgate, has a very effective video distribution, and so on and so forth. So often, we come into that and we'll say, well, actually, if you look at the top half of this chart, all of these films went through this distributor. So these are the guys that we recommend you talk to first. So as far as choosing the comparable films, there are really 4 pieces of primary information that we're looking for. The budget really is the key at the start. So we really need to know a pretty reasonable idea of what the budget is going to be for the film. And then the second one is the genre. And then key talent, particularly the director and lead actor, are very important. And then, as we were talking about, the target distributor. Although, that's very important actually, when you come to the distribution, as far as, finding the comps, often we don't need to know that, specifically. As I was saying, we can't kind of go back into finding the right distributor for a film. And then the secondary information is things like the themes and the plot of the film. So, if it has a particular, type of dramatic arc, then, we're very interested in that. Historical fiction performs, a little bit different from contemporary fiction, so we might, use that as a factor.
Like topics like coming of age or revenge, or like what kind of themes are there?
Gosh. And I always, when I'm talking, I always get stuck on this because I always think of incredibly morbid things. But there's kind of, there's coming of age, and then there's the sort of the equivalent for an adult, which is, somebody, is diagnosed with cancer and then they overcome the cancer, or they're an athlete and they break their leg before the Olympic Games, and they the story of their recovery, and so that's sort of a very, very typical arc that we're dealing with. And then there's the genre films, so horror, there's the supernatural horror, and then there's the more sort of blood and guts, the gore horror. There was the torture movies that suddenly became popular for reasons that we won't psychoanalyze the American public over in around 2004, 2005. So obviously, if it's based on a book, that's an important popularity or appeal to a similar kind of audience. And then the final thing, we generally try to find films made since 2008, And the reason that we go with 2008 is that that's, you know, the financial crash and, you know, really the start of the recession. And what happened in 2008 was that people stopped buying DVDs. And so there's a big change in the video market around then. And you know, I wanted to share with folks a tool that is useful if you're doing, you know, this kind of stuff. We use it ourselves. The default is to just include all films, so it brings up an ordered list of the highest grossing films at the domestic box office. But you can filter this down by any parameters you like. So you know, we were talking about horror movies, so let's use that as a starting point. So we can say the genre equals horror, and if we just click build report on that, it shows you top grossing horror movies, and then you can you know, start to filter that down to meet your criteria. So let's say, you know, you're making a horror movie for $3 million. You can put in a budget range, say between 1 and 5 million. As I was saying earlier, you know, a release since 2008 is probably useful. There are various other things that you can do. So let's say, you know, I'm only interested in R-rated movies produced in the United States, let's say. So you can pull in all of these parameters.
This report generator is actually available free. So is that, can you show me what the link is on your website where people can actually, this is a good way for people to do a thumbnail, you know, if they start thinking they want to do a Western, you know, for, they start get into their head that they want to do a $20 million Western or something like that. They can go sort of take a look at how well $20 million Westerns have done.
Exactly. Yeah, yeah, and it's as I say, you know, it's linked from the homepage here, completely free to use, and you know, you're free to use the data from it, and its URL is thenumbers.com/movies/report builder.
Right, and it's under trending pages. There's a link called report builder. Cool.
That's right. Yeah, yeah.
Very cool.
And okay, so you can put out this list of films, and then click on the customization. So this is all 33 films that we have in the database, R-rated horror, made in the United States, with budgets between $1 and $5 million. So this isn't comprehensive because, you know, we don't have the budget for every single film, which is why there are probably a few that are missing from this list. But we do have it, you know, for most films, certainly most films that get a theatrical release, and you know, many other films, as you can see here. You know, there's quite a few here that don't have domestic box office, but obviously we've managed to get the production cost for it.
And this isn't enough. This isn't the kind of data that you would actually include, you would give to investors, because it's not comprehensive enough. First of all, it doesn't have any information about marketing or key cast or director or any of those other parameters.
Right.
It's important to determine whether or not the film's actually going to make money.
Right, right. So this is often for us, this is kind of the starting point, and we'll work with the client, and we'll start from this list, and we'll say, okay, so here are the films that we think are potential comps, and then we'll select out of these the 20 that we think are the best fit for the type of film that they're making.
Right. So this said horror, and then if you might say, okay, so you know, they might come to you and go, well, in the top 50, these are the 20, or these are the ones that I think are most comparable to mine, because they're all paranormal ghost stories that are also horror stories. And that would let you weed out stuff like Saw and you know, the other really gory horror flicks. So
right.
It's something you use as a starting point, so that you and the filmmaker can work together on what the most comparable films are and why. Exactly.
Yeah. Yeah. And you know, just one sort of final note on that. You can actually tweet your results if you're so inclined. But every report like this actually turns into a unique URL, and it's an enormous URL because it's got all of the parameters involved in this. But you know, if you're working with a colleague, you can, you know, send them the URL in an email and say, well, check this out. You know, these are the films that I think are, potentially good matches for your film. And as I say, we really use this all the time as we're, looking at projects for clients. Actually, that segues into, I think it's probably a good time to show the actual reports that we build from this. So, let's say we've started with this list and we've picked the 20 films that we think are the best matches. We then do an analysis of each of those 20 films. So this is a sample report, so it just shows the film name is Comp 1 through Comp 20, but these are a representative sample of films for this particular project. And what we do is we go through all of our data that we have on these films and the models that we have to get all of the different revenue streams for the films. So the domestic box office, the international box office, domestic video sales, international video sales, domestic video rentals. So all of these first 5 key numbers we're actually tracking, on a weekly basis for films, and then the remaining 4, the TV and ancillary rights and the international video rentals, we have models that develop how much we think these films are likely to have made from those revenue streams.
Exactly. And then of course it's not like the producer doesn't get all of that money, because they have to split it with the distributor. So if the domestic gross is 40,000, that means that they might be getting less than half of that because they're going to have to share it with the theater system or et cetera.
Right. Exactly. Yes. And there's one other key sort of piece of data that we're also estimating for each film, and that's the P&A cost. So that's factored in here as well. So we estimate based on the distributor, based on the distribution, pattern, so how many theaters it played in, based on the genre, and some other factors that I don't recall right now. We produce an estimate of how much we think was spent on marketing for that film.
It's kind of an interesting thing, because when I look at that, you've got a $10 million film with ad costs of $13 million. The ads are more than the film production budget.
Yes, and the rule of thumb that I've heard quite often is that the advertising budget is generally sort of in the ballpark of the production budget of the film. We find for independent films that get a serious theatrical distribution through a major distributor, it's often the case that the advertising is actually more than it costs to make the film.
That makes sense, actually.
Yeah. So what we do then is we then put this through a distribution model, and I'll show some of the details of that on the spreadsheet in a moment. So we get how much money the distributor has collected, what their distribution fees and costs, including those marketing costs, will have been, and therefore how much money will have come back to the producer in a simple distribution model scheme. And therefore what the overall producer profit or loss should have been on this film. And because we're doing this for 20 films, we tend to avoid skewing the data massively, by having 1 or 2 films that have done quite well. And in order to reduce that skew, we take the median numbers for each area. So amongst all of these films, the median box office was $19.6 million domestic and $11.4 million international. And that's what we use in our investor scenarios for the film. So here...
So you actually do projections for the investor on how much the film's likely to make for the producer. So when it says domestic box office, that's the domestic box office for the gross revenues from domestic box office. That's all the money that was taken in. It's not the net amount that goes to the producer, or is it?
Right. So in the summary, we take the consumer spending figures, so domestic box office and domestic video consumer spending and so on, and then we map out what we think the domestic and international overage will be, and that's what comes back to the producer based on those. And we actually break that down under domestic and international distribution. So we show for that $19.6 million domestically, so much is going to come out in theatrical rentals. So the distributor will end up with $10.8 million. They'll take out a distribution fee. There'll be the advertising costs and overheads. There's the print costs, additional overheads. And very often what we see, this is completely typical for a film, is that by the time you get out of theaters, you're fairly deep in the red because you've spent all this money on marketing,
right.
The distributor has taken their fees and so on.
And I think that's something that a lot of filmmakers don't understand, is that theatrical release is usually a loss leader. You usually do that. The objective is to get a theatrical release and then see if you can turn that into getting a better international or subsequent revenue generated because you did have a good theatrical release and good promotion.
Right. No, absolutely. That's a great point. Yes. So our models almost always show it, and it's a very common outcome for a film that you're spending the money and you're putting the film out in theaters in order to get a reputation for the film, and then you're really recouping the money when it goes onto video.
Well, when you did a minute ago, the numbers you showed said service deal theatrical release. So that's interesting. A service deal usually means that you're paying the distributor to distribute the film, like there's companies like Samuel Goldwyn that you basically pay the money, and then they go ahead and do the distribution for you. So they basically distribute the film theatrically as if they were consultants or they were fee-for-service people. Is that actually what service deal meant on that last page that you showed?
Kind of. I mean, we use it for both scenarios, and you can put into the assumptions how much of the and I can't see it here exactly, but how much of the marketing costs were spent by the distributor versus the producer putting in a share of the
because I think a lot of people, especially a lot of small independent films, are doing platform releases where they're doing really, they might only do 6 to 10 or 20 theaters or 24 theaters or something like that, and they really are basically doing a service deal theatrical release. And in other words, they know they're going to lose money in theatrical release, so they're just going straight toward losing money in theatrical release and at least spending the money themselves. So they're not giving it to a distributor. They're actually doing the theatrical release themselves and then working with the distributor to do international and other releases. Is that correct, or am I mistaken?
No, that will definitely happen for independent films, and we. Quite a few of our clients they'll put the film out themselves in theaters, and then it may yet be picked up by distributors and then put into theaters again as a more substantial theatrical release when the distributor picks it up. But that initial theatrical run that the filmmaker has paid for themselves will establish the fact that people will actually show up in theaters and pay to see it, which
it's proof of market in effect.
Right. Yes, I mean the one thing that we've heard from distributors is that they really don't like anything other than that kind of four-walled theatrical release, and so if you've put it up on on Vimeo and people can pay $20 to see the film, that may be enough for a distributor to say that they're not going to touch it. They can have very, very strict rules, which in some cases, may not even make a lot of sense, but they will say, if you've put this film online in any kind of way, we're not going to distribute the film because we don't trust that we're going to be able to get a theatrical release.
And there are companies there that specialize in theatrical release, but the kind of theatrical releases, service deal theatrical releases where you just pay for distribution, like Cinedigm and Samuel Goldwyn, and what's the other one called? There's
Freestyle is big in that. And they do they can do a very good job on an independent film. If you have the money for P&A,
You just put it into the budget. You treat, if you're going to do a service deal distribution, you basically say, my theatrical release is I just want to include it as part of the budget for the film. Just right. I want to raise it. I want the investors to pay for the service deal theatrical release, and I want to do it because I think it'll guarantee that we get a better distribution than we would get if we tried to sell the rights for theatrical release in advance to the distributor. Because it lets us control the distribution. It means that there's no way that it's no way that initial theatrical release, which is so critical, can be screwed up because you're the one doing it and you're working with people that do it for a living.
Right. Well, if anybody's going to screw it up, at least it's going to be you, I suppose.
Well, I mean, you laugh, but I mean, I've seen a lot of films that actually got killed because, I don't think it was intentional. It wasn't that people didn't like them, but, a distributor has 100 films. It has a lot of films, and a filmmaker has just one, and over the course of a year or two. So that one little film is really important to you, and not maybe so important. Your $1 to $2 million, $3 million film may be critical to you, to your career, but may not be critical to the distributor's career.
No, it's a great point, and we've seen this particularly, and I'll talk about the landscape for digital distribution, but we've seen this particularly in that area where you've given the film to a particular distributor and they have the rights to do pretty much whatever they want with it, and they will do a deal where they'll bundle together 100 films and they'll sell them to Netflix in one big block. Because they've got 100 action movies and Netflix are interested in getting 100 action movies because they want to say they've got thousands of movies to stream. And so from Netflix perspective, they'll say, well, we'll give you $1 million for the rights to these 100 films. From the distributor's perspective, that's fantastic money. It's $1 million in cash that they just, landed on. And when they divide it by those 100 different films, it's actually $10,000 per film in revenue. Mm-hmm. So you as a filmmaker, you can see your movie suddenly appear on Netflix. You can even see it, like trending on Netflix. It's recommended. Lots of people are watching it. It seems to be really popular. And when you go to your distributor, they'll tell you, well, I only got $10,000 for it. So it can turn out to be a very poor deal for filmmakers when that happens.
Right. So
the distributor can argue it's better than nothing, of course.
Well, no, but I guess the thing is, I think there might be a slightly different set of rules for people that are. I think if you're doing a $1 to $3 million film, you're in a different position because usually you're doing it because it's early in your career. You don't have a lot this is like your first film, and you really do have to make sure investors get their money back. And it may be the case that you're going to be a better, more interested in ensuring that it has a good initial theatrical release, has good initial press than a distributor that sees it as a $1 to $3 million film, not your baby. And I think the rules may change dramatically when you start talking about a higher budget film, or you start talking about your second, third, or fourth film when you've got a track record, because then the distributor says, okay, well, this is actually a proven performer.
Right. And I think one of the things that I think is always worth asking is the distributor invested in a long-term relationship with you?
Right.
And if they're not, then that can be a little bit of a red flag, because they'll be thinking of this as another film that they can put in their library, so they have 100 action movies that they can sell to Netflix, rather than being, here's somebody with whom I want to have a long-term relationship and build a business with over time. So let me just quickly go through the rest of the projection here. So as you mentioned, we do the low, medium, and high projections, based on revenue. So the low is 50%, so basically half the revenue, and then the high is 200%, double the revenue. Mm-hmm. And we work that through to see what that would look like for an investor. Wow. And in the medium scenario, it works out at about an 83% return. the high end, it's a 340% return. And the low end, you're probably losing quite a lot of the money, minus 78%.
Mm-hmm.
A couple of other things that we do in this analysis, and this is part of our extended analysis, is an international territory breakdown. So we look at the major territories, so the United Kingdom, Germany, France, Italy, Spain, Japan, Australia, and South Korea, and look at how much we're making at the box office in each of these territories, and therefore how you would expect a typical film like this to perform in these different territories. We do that for box office and for video sales, and then we map that through to a revenue by territory, where we're saying, for example, in the United Kingdom, this type of film, we would expect $10.5 million in consumer spending, which translates into $6.4 million to the studio. After their costs, we think that their gross profit would be about $3.6 million. And therefore, we think that in the UK, this type of film would warrant a pre-sale of about, in this case, $730,000.
Do filmmakers who are looking to work with distributors take your projections and include them with the package that they submit to distributors?
Generally, what will happen is that people will take these numbers into their negotiation with a distributor. So a distributor, when they go to the UK distributor, they're hoping that the guy from the UK is going to say, we're going to offer you $750,000 or £500,000 or something for this film. So it's really about going into that negotiation with an idea of what you might get as an offer from that party.
Right, and the other thing is that, but do the distributors find your data authoritative because you do have the track record of creating accurate comps? I mean, it's either, because otherwise they're going to have to go create the comps.
Well, so the distributor will have an idea of what they're going to offer, and this is really, kind of a sanity check for this number. So it's really to give you an idea of what you might get when you sit down with that distributor. They will have their own models and they'll have their own expectations, and they'll know what they're going to offer.
And if there's something wildly different, if their projections seem wildly different from yours, there may be a miscommunication problem in terms of their understanding of the film.
Yeah, I mean, that's really what this is about being able to go into that negotiation knowing what a reasonable number is. And if you don't hear that number, then you need to go back and you look at it. And that's the point. Sometimes people will bring out the spreadsheet and they'll say, well, here are 20 films that we think are quite similar to ours. Here's what they made at the box office in the UK. Why is it that you don't think our film is gonna do that? Or do you think it is, but it's are you lowballing us for something? But at least
it gives you, which is, I think, an important thing, because if a lot of times it's difficult to figure out where miscommunications happen. And in this particular case, if you say, look, this is a film, it's very similar to Sixth Sense, it's very similar to X number of horror stories, and yet you're offering me substantially less, and they'll say, well, but your director's not very good. And you go, well, this director actually has been performing pretty well recently. That's why I picked him.
Right. Yeah, I mean, it allows you to get into that kind of level of discussion, which is useful. Yeah. Cool. Okay, so, and then the final piece, again, this is part of our extended reports, is the cash flow. Now, this is a gigantic spreadsheet.
Wow.
Which maps out the monthly income and expense for the project based on the production budget and based on all of that analysis we've done of different territories. And that boils down to an annualized IRR figure for the film. So this is an internal rate of return. So somebody who invested in the film, this is their equivalent rate of return that they would get on their money for this project. So,
and that's based upon them hitting the median mark, correct?
Right, correct. Okay, and then the final piece of the report that I will go through quickly here is we summarize all of that information onto a PDF report. So this is what we provide as something that you can print out and put in a package and give to potential investors. So we have these investor scenarios that we just went through, the domestic and international analysis, the breakdown of the profit and loss for the comparable films, the international performance. So, what's the average box office and video spending is by territory, those pre-sale projections, and then the cash flow analysis, which we put into a nice chart. So this is hopefully an attractive package that you can put in that sort of really breaks down all of those numbers, or summarizes, I guess, all of those numbers, so that you have it in a easy to digest form in a hard copy or as a PDF that somebody can take away with them.
So do you provide the whole suite of spreadsheets along with the PDF report, or the spreadsheet's internal documents?
So both. So the package consists of the spreadsheet plus the PDF report. So
that people can actually, filmmakers can actually change the values based upon what the revenues that are actually coming in, and see the impact on the forecasts.
Yes, actually, basically, as you're looking at the spreadsheet, anything in here that's in yellow, you can change, and it will recalculate all the values. Wow. I don't think it does this in the sample, but if you get a international advance that is $1 million instead of $500,000, you can put that in, and you can see how that plays through into all of the other pieces.
Wow, that's really cool.
Yeah,
that is very cool.
All right. So I just looking at the time here, I probably should sort of go through the rest of the presentation pretty quickly here, and then we can take some questions, maybe.
Well, I think people are certainly going to want to know. You sort of offer package services, because you've basically sort of standard packages, and then you can also do custom reports. So if you could sort of talk about what people have to have before they approach you. They have to have the screenplay, they have to have the budget. You sort of listed the things. So how do they bring that to you and then say, I'd like you to do a standard report for me?
Sure. Yeah, actually what I can do is, I think I can bring this up very quickly. So we have a questionnaire, and it's basically the information that I talked about earlier. So the budget, the genre, it's a pretty straightforward set of questions about the film. The one thing that we need to have, which is, takes a bit of work, obviously, on the part of the filmmaker, is the production budget. So knowing what that is very important for finding the comparable films.
And that has to be the actual production budget, I don't know, actually made by, say, a line producer or a UPM who actually does this kind of thing for a living, and maybe one that can get a completion bond, because, you're assuming that people have a completion bond.
It's okay to have a ballpark budget, but the more confident you are on that, the better, obviously.
Right.
If it's just, something that you're sort of, you've really not verified, then that can be a problem, because we can do all the work, and then you can come back and say, well, we thought it was going to be 5 million, actually it's going to be 12 million, and then it's a different deal. Of course the budget changes all the time, and to go from 5 million to 6 million isn't going to really change things very substantially. So that really wouldn't be an issue.
But it changes the comps. If you double the budget, it changes the comps.
If you double the budget, yes. If you change it by 10% or 20%, that generally doesn't change the comps very, very much. They'll still be in the sort of pretty much the same list.
Cool. And then the attached cast is, you're assuming that people already have an idea who the attached cast is going to be. Is it the case that they could ask you? Is that a special report that they could ask you to run for them if they said, I'm doing a $3 million horror film. Can you give me the top 5 people that appear in things with a similar budget, so that they can determine who might be best to cast?
Yeah, we can do that. Generally, people come with a pretty good idea, but we can certainly do some analysis around that. Yes, and we have. As people may have seen on the website, we have our Bankability index, which gives values for individual actors and directors and screenwriters, and can be used to look at people. You know, obviously, if you're making a $5 million film and the director, you know, has a value of $7 million, it's very unlikely that you're going to be able to get them to direct your $5 million film without, you know, giving them some amazing back-end deal. And even then, you know, they've probably got a lot of opportunities on their plate. So, you know, we can do some work to validate that for sure. You know, and when you're working with anybody who's doing this, and obviously, you know, we're not the only people out there, you know, a few things that I, you know, believe, you know, are important when you're looking, you know, for these reports. You know, always beware of people who make improbable claims. And, you know, this is the film industry. You can't make perfect predictions about the film industry. And, you know, lots of people are, you know, coming up with models and, you know, saying, you know, we can do this and that, and, you know, do all these kind of predictions. In general, for an independent film in particular, you can only be accurate to about plus or minus 50% on the box office. And there are certain scenarios in which you can sort of narrow that down, you know, and you know, you can certainly, on a studio film, as you get close to the release, you can just sort of get plus or minus 30%, and, you know, even closer sometimes. But for an independent film, you know, plus or minus 50% is about the best that you can do. So, you know, when Malcolm Gladwell, you know, writes that article about how, you know, this guy can predict a movie to within 5%, you know, that's a big red flag to me that you know, something kind of fishy is going on. The other thing I would say, you know, there's models, and you'll see this in books that people will write, you know, that you can take the box office and then you can say, well, we'll get, you know, the same amount in video sales, the same amount in video rentals, and you use the box office as a basis, and then take percentages from there for everything else. And this kind of comes from the way studios do things, where they have, you know, a lot of experience, a lot of films, and they have a certain size of release, and they can, you know, use this for modeling. It doesn't really apply for independent film. You know, any film that is making, you know, less than $10 million at the box office, you know, the box office just isn't really very correlated with video sales or video rentals. And, you know, horror films, you know, much better for video rental, you know, drama is much better for video sales. We're beginning to learn what works and what doesn't work on VOD. You know, all of those things, you know, you need to analyze for your film. And just having the, you know, an idea of box office doesn't really tell you very much. Beware of black boxes. You know, if somebody has you know, this magic model, and all you do is you just provide them with the numbers, you know, data about your film, and it spits out a projection. You know, that may be great, and it may be based on, you know, good science and whatever. But the problem with that is that then if you take that to your investor, you have to be able to explain to the investor where your numbers come from. And if you're saying it's a black box and it's this guy I met who's got this great thing, you know, then the investor is going to say, well, you know, this doesn't give me any confidence at all that you know, your film is actually going to make what it says it is. This was actually a mistake I made right at the beginning when I first did this, because, you know, I've come from an analytical background, and I said, okay, well, I'm going to build this model and provide it to my clients, and it's going to be predictive of how much movies I'm going to make. And, you know, I did this for a few clients, and they, you know, went to their meetings with investors and came back and said, we had a great meeting with the investor. We need to set up a call with you because the investor wants to understand your model. And it really became very obvious very quickly for me that I was going to have to be involved in every single conversation that my clients had with investors, which obviously wasn't sustainable from a business perspective. So, you know, didn't work for me, and I don't think it really works, you know, in general. And, you know, so, you know, I would tend to avoid it. And then the final thing, don't spend more than you need to. You know, there are some very expensive services out there, you know, who, you know, with talented people who are doing, you know, cool things. You know, for an independent film, you know, our reports are $590 for the basic package, which is everything apart from the international territory and cash flow analysis.
Mm-hmm.
And the full package is $1,400. And that's really, the pricing is based on the fact that we've worked with a lot of independent filmmakers, and
Mm-hmm.
when you're at that point of trying to finance a film, spending $5,000 and $10,000 really doesn't make sense for your project, even if you happen to have the money.
Mm-hmm.
So we really try to price it and structure the reports so that we can offer them in a cost-effective way and provide people with with useful information that is actually going to help get their films financed.
If I want to compare distribution options or something like that, did they just consult with you? They just ask you for a quote after you do the basic package or the full package?
Right.
Ask you for a quote because you already have the data.
Yes, exactly. Yeah, that's basically how we work. It is there'll either be new reports based on different scenarios. I have a few folks that I've worked with a long time who are experienced producers who will sometimes step in and help on a particular project where we have specific questions, and so we have the resources to help folks with
Cool.
different questions on their films.
That sounds very cool. Do you have and how do people just email you through the numbers.com or through your email address and say, I'd like to ask you to do a report, or is there a place that they go to request a report?
Exactly. So if you click on research and data and the numbers, there's an email address, and it's just research@thenumbers.com is the email address, and that actually goes directly to me and to other members of the team. So we actually run the analysis on.
I think it would be interesting to know which directors over the last 5 years for a given kind of horror story, is there anybody that's performed particularly well? I think you mentioned that the sound designer for Avatar, I asked you about underappreciated talent. You say that there's the sound designer, and everybody's on
right. Yes.
Oh, wow.
Yeah, that was something that came out of our when we ran the Bankability index analysis. Was that that is completely agnostic, I guess you'd say, on whether somebody is a director, an actor, production designer, costume designer, and it turns out when you run this analysis, there's a guy, Christopher Boys, I think his name is, who is a sound designer and designs the sound for blockbuster films, and his resume is essentially every billion-dollar movie ever made. He just did the Lord of the Rings movies. He did Avatar. He probably did Star Wars. I think he actually works for or worked at Lucasfilm or Industrial Light and Magic, I guess. So he's the guy. When you go in and watch a blockbuster film, he's designed the sound environment that you're sitting in, and you don't really think about it until you run this kind of analysis and you see, well, actually that's kind of one of the things that makes a blockbuster. And I think he's the worst. I don't know how much he earns, but whatever it is, it's probably not as much as it should be, because he's the guy who creates that atmosphere in the film. On that point, one of the things that we discovered was that actually one of the key people in the team is the casting director, and a good casting director can really find you the right people to make a film work.
Do you actually track? Are they listed in your Bankability index?
Yeah. So we have a list of the most bankable casting directors in the business.
And are they sorted by? Do they indicate sort of the budget levels? I guess it lists the films that they worked on, and you can basically see if they're in your ballpark. Right.
Yeah.
Wow, that is really cool. Anyway, let me go ahead and I'm going to do a couple of things with your permission. I'm going to go ahead and I'll go ahead and I'll make it so people can chat with us, and then if there's other topics that you think we should cover, we could bring it up. But I want to let people submit any questions that they happen to have. I have a feeling that I think you answered so many things, but let's go ahead and see. Okay, so this one said, one of the questions we had, which I think you answered, is whether or not you track statistics for actors as well. And I think you referred to the Bankability Index. That's different. Can you talk a little bit about how that's different from the star meter that IMDb has? Because I've often found the star meter to be a completely bizarre measurement. I don't understand what it does, actually. I don't know what it's doing.
So what we've done is we've built a network of everybody who works in the industry, and we've connected them according to the films they've worked in together and how much money they've made. Mm-hmm. And so we've got some, 150,000 people in the database, and 20,000 films, and we've built this network, and we use network analysis technique to figure out who is the most important people in the network, and we translate that into a value for each person. Mm-hmm. And so we publish this each month. We actually haven't published it for a few months, but we're going to start doing it again very soon. Mm-hmm. A measure of which people generate the most money in the industry. At the top, you can see Steven Spielberg, as you might expect. Mm-hmm. And he's worth about $10 million per movie, mm-hmm. according to our analysis. Samuel L. Jackson, worth about $5 million per movie, but because he makes 5 movies a year, he's actually number 2, or was when we ran it back in December. Mm-hmm. Adam Sandler is kind of interesting. I think most people would say that he's kind of declined in value recently, but, mm-hmm. but obviously very strong track record. And then Johnny Depp and Tom Cruise and Brad Pitt and so on. The interesting one, and this sort of starts to speak to the other people involved in the film. Number 7 is Hans Zimmer, the composer. Again, makes a tremendous number of films, over 4 films a year. He composes the score for mm-hmm. With his team, and very key component in a lot of very successful films. Likewise, Stan Lee, of course, with the Marvel films, Thomas Tull, mm-hmm. The producer, and we find, there's the people at the top tend to be either, these very big star actors, mm-hmm. Johnny Depp, Tom Hanks, Brad Pitt, or people who produce films. So, mm-hmm. Stan Lee, Thomas Tull, John Lasseter from Pixar and so on. But we actually have this for all 100,000 people in the database. We sell each month a top 250, which measures the top 250 people in the industry, and that starts to get you down into the sound designers, costume designers, and at least the top people in their field in each of the major departments in films.
That is very cool. Somebody asked, do you have a list of potential investors that you have invested in comparable films? I don't think you tracked it. I think you don't track investors, but you do track distributors, and you do track. So I don't know. Do you track? You don't track finance companies, do you, or states?
We don't. No, that's a good question. We really do not track investors, and for independent film, my experience is that investment comes from all over the place, mm-hmm. And it's not something that we've ever been able to kind of track at the level of that we like. It's a great thought, though. I mean, I think it would be great for an independent filmmaker to be able to, get the list of people who might invest in their film. Alas.
Let's see. Let me go ahead and check. I think I had one more of my incoming email. And this one I don't think you necessarily can answer because it would be based on budget. Can you give people an idea of how much people can make from distribution through platforms like Netflix and sort of the other premium web channels? Because I think that's going to be a larger and larger, it's kind of replacing television, broadcast television, at least in the United States. And I don't know if that's true elsewhere, but if you could talk briefly about that, that would be handy.
No, absolutely. And we do track that. So we have models for what people are getting from Netflix for films. Mm-hmm. what VOD revenue is. So we are tracking all of that. We actually don't have it by default in the reports because we don't have it for all films. But if you get a report and just ask for it, we can include a breakdown, and we break down for video, and it's domestic video only at this point. DVD sales, Blu-ray sales, electronic sell-through, so that's buying a permanent copy, a permanent digital copy. VOD, which is buying a license to view for 24 hours or 48 hours.
Well, it's like iTunes and Netflix. I mean, what are the ones? iTunes, Netflix, Amazon. Those are Hulu. Are there other premium ones that you have kind of data for, or?
Yeah, so we're basically tracking all of those. Vudu is the other one, which is owned by Walmart. So VOD, physical rentals, and primarily Redbox these days. Then subscription streaming, which is Netflix acquiring the rights to stream the film. So those 6 things we can break down in the United States only at this point. We can't do that internationally, alas. But yeah.
Great. Yeah, and then I guess this actually is our last question, I think. Do you and I think this is something that a lot of people will be curious about, because as you've gone through this, it becomes clear that a significant part of the pitch to investors is actually the film analytics. So do you actually provide coaching, or can you provide coaching to people or training to people, or do you run seminars or something where you can teach people how to explain persuasively and honestly the data that's captured in the analytics report?
Yeah, that's a great question. Thanks for asking that. We do give people the option of setting up a call. Once we produce the report, we'll talk through it with them and answer any questions. I don't provide specific training for that, but obviously want to make sure that people are able to use the reports effectively, and we try to make sure that we talk through and answer any questions on it. One of the things that drives me and makes me passionate about my work is helping people bring new vision into the industry. And I talked about how the film financing model kind of prevents that, but I think that the more people that we can have who have the opportunity to put together compelling plans for their films, the more variety and the more interesting filmmaking we're going to get. And to me, that's why I love the film business, is because of the people that you meet, who are doing stuff that they're really passionate about, that really is, interesting and new and exciting to get involved with. So
it's true.
Yeah,
it's true. There's no doubt. Lucas was once a newbie filmmaker.
Right.
Taking a crazy risk, and look, it kind of worked out for him.
Yeah, now he's got $4 billion and probably a very nice house on the beach somewhere. So.
Yes, he does, probably. Anyway, thank you so much. You're really, truly a wonderful person. Thank you so much.
Okay, thank you, Nancy. It was a pleasure, and thanks again to everyone for joining us.
I hope you have a nice evening.
All right, thanks.
Good night.